talk about Utkarsh Small Finance Bank, and let me welcome on board Govind Singh, the MD and CEO, joining in on the show right now. Mr. Singh, great to have you today on ET Now. Thank you so much for taking the time out. Let me first talk about the loan growth that you've clocked in, because you've maintained your FY24 guidance as well of around 30-odd%. You're also strategically adding proportion of secured portfolio now. What's your internal target for your secured portfolio as a proportion of your overall portfolio?
Yeah, thank you very much for having me in. So as far as you mentioned, around 30% growth that we have, projected or that we had given guidance for, that's on track for sure. And secured portfolio also, we are almost around 35%. And our medium-term target is that we should be around 45%, as far as our secured portfolio is concerned. So we are seeing a good growth in secured portfolio across, we're almost, you can say almost nil secured portfolio when we launched the bank. And on year-on-year basis, there had been a good traction, good growth in this part. And we expect this, in medium term, this moving from 35% to around 45%, the secured portfolio part.
Okay, Mr. Singh, good morning. This is Vinny joining in the conversation as well. You're saying that the secured portfolio, obviously, you're going to be seeing an increase coming in, but that unsecured part is still quite high, right? So in terms of the MSME side, how is that looking like for you in terms of the trends that you are seeing? How do you see the loan book growth actually growing over there as well in the MSME segments as well? Are you expecting the strong growth to continue that we've seen?
Oh, certainly, yes. See, if you see our history, I mean, historically, we are an NBFC MFI. So we had a large NBFC MFI portfolio, and microfinance still is one of the things we understand very well. Because of that, you can see the unsecured portfolio is large with us. But if you exclude microfinance, our, almost 90% of portfolio is secured portfolio. There is hardly any unsecured portfolio beyond microfinance or microcredit. In terms of MSME, yes, MSME is doing really good, and we are seeing a good traction. I think 60 to 70% growth because of a low base. I mean, we should also keep that in mind. So that is for, we are seeing, and that trend or that trajectory is continuing on a month-on-month basis or on a quarter-on-quarter basis. We are seeing a good traction, good growth in MSME. And you yourself mentioned that around 13% retail MSME, and we are seeing good growth in that. And that is expected to continue.
Also, your CD ratio, that's near 100%, given that most of Q4 is behind us. Do you have any internal guidance that you want to share as to where the CD ratio is heading? Is the bank comfortable with such a high CD ratio? Do you have any plans to bring it down?
So I think CD ratio should be seen obviously, I mean, in isolation, but you should also look at the composition of our the resources or the funding book. So it's largely deposits followed by capital. I mean, we have almost 24% of capital adequacy ratio. So that is also supported for the loan growth. And we have got refinance, which are normally long-term loans taken from institutions like NABARD, SIDBI, and NHB. So if you look from that angle, I mean, see, when RBI talks of CD ratio, they are always concerned about the volatility of deposits. So that's not the case with us at all. Our deposits and our overall resource is very, very strong. We have always been net lender in market, and we have always keep a adequate cushion and buffer as far as the funding part is concerned. So we don't foresee any challenge. Yes, we do expect, and we are also trying to reduce our CD ratios from current almost 99%. We do expect in medium run, maybe if you look at 3 to 4 years horizon, it should be in the mid 80s as far as CD ratio is concerned. But and even today also we are quite surplus in terms of overall liquidity. So there is no challenge at all. Yes, over a period of time we need to bring it down, and that is what we have planned so far.
Right. I just want to know in terms of your loan book growth, because you've given a guidance 30% is for FY24, but FY25, FY26, do you think that's something that will be sustainable at these 30% levels, or maybe slight bit of a decline is something that is there that one could expect?
So as I mentioned, in medium run, if you're looking next 2 to 3 years time, certainly this is sustainable for a simple reason. We during last 5-6 years, we have created a lot of new verticals, for example, MSME, affordable housing, wheels, the SME segment, from the BBG business angle, all are the new segment those were created during last 4-5 years time. And in terms of overall, volume, or in terms of overall ticket size, overall, AUM, these are very small businesses for us even today. I'm talking from the base angle. So growing these businesses at 60-70% for next 2 to 3 years time is not a problem. So when you're microfinance, I mean, we expect around 20% odd growth of microfinance also. So on a blended basis, around 30% growth for next 2 to 3 years time is very much on cards, and we don't foresee any challenge in that.
Right. You know, the other thing, Mr. Singh, I wanted to understand was also about your cost of funds, because they've been inching up. And, you know, if I'm not wrong, you expect an increase of further around 8 odd levels or so, 8% that is. With this, do you expect any impact on coming up on your NIMs for the fourth quarter? Or you think we can expect the NIMs to stay above the 9% mark?
In fact, you know, cost of fund actually have gone up little bit mainly because of repricing of fixed deposits. So typically what happens, you know, fixed deposit in case of loan, because there are most of the loans for people, for us, maybe it may be different. It may be a little different, but for normally people, they have floating loans, so they're able to pass on the cost immediately. Whereas in case of deposits, the deposit get repriced over a period of time. Normally for all the banks also. In fact, we are a new bank, so our average deposit may be around 2 years or so. So our almost 80-85% deposits have already been repriced. So we do expect maybe around 10 odd basis point, 8 to 10 basis point increase in our cost of deposit, or cost of funds overall in this quarter, but not more than that. And as far as NIM is concerned, you know, our NIM has been for quarter 3 around 9.7, and we have also given a guidance that, you know, it will not be below 9.5 for sure for quarter 4 also. And even in the medium run, when you're looking 2 to 3 years horizon, these will be upward of 9% only. So in NIMs will remain intact despite we have seen little bit increase in the cost of fund, because most of the cost of fund have already been factored in. And also, you know, we are also able to pass on some of the, cost to lending part. Our yield has also gone up by around 20-25 basis point during the last 3 to 4 months time. So that's also getting compensated. So there is no pressure on NIM, as I mentioned, around 9.5% plus for quarter 4, and certainly above 9% for if you look at 2 to 3 years horizon from here.
Okay, and what about your credit costs coming down to the 2% level? Just wanted to understand that, given that Q4 is usually strong when it comes to collections, and credit costs will go down, or is there any other strategy that you're using to keep the 2% level around that level at least sustained?
As you mentioned, we had given guidance of around 2%, so those are on track. Two factors certainly help us. One is normally, there will be buoyancy in market, so normally credit collections improve for sure. But I think we had seen this trajectory happening, and the growths are also good. And overall, I mean, we have our core geographies like Uttar Pradesh and Bihar; those are doing good. Especially UP is doing really good. So collections have also gone up significantly across, in fact, be it the secured portfolio, be it one of the new unsecured portfolio, or be you talk of the microfinance portfolio. I think across we are seeing a good traction, good improvement in the collections overall. So the way you mentioned, 2% credit cost for quarter 4 is certainly on track. There are no challenges what we are foreseeing in that part for sure.
Okay, Mr. Singh, let's just talk about your expansion plans as well. And in terms of which geographies would you be looking at right now? Obviously, given you cater to mainly in the Bihar region, around 42% of your revenue comes from Bihar, 29% from UP as well. Would you be looking to diversify or expand in the other geographies that you're already there? And what are you looking at in terms of expansion strategies?
So we have already, you can say, expanded across the country. Now we are into 26 states and UTs. But historically, we are largely in Uttar Pradesh and Bihar, and even today. In fact, what you mentioned is basically microfinance. Our microfinance concentration or microfinance portfolio in these 2 states. That's for sure. But if you look at the non-microfinance book, it is largely outside these geographies also. So we have seen a good expansion across the country. And next year also we are planning to, we have our board approval for more than 150 plus branches to be opened in next financial year. So till March 25. And these are across the country, in almost all the relevant or the important states or the centers we are covering through that. So you'll see a good expansion of network also. And also, diversification of our portfolio beyond Uttar Pradesh and Bihar. That has already happened. If you are looking at loan book, that has already happened. Deposit book is obviously it is quite widespread, across the country. But even loan book is also happening right now, and this expansion is across the country for sure.
The country pan-India expansion. But lastly, I just want to know if you could share some update with us on the demerger from the parent entity. What's the progress on that front? If you could share any details on that.
Oh, certainly, yes. So we got a, we can say confirmation from the holding company, the parent company, that their board has approved, and it has come to the bank board now, and bank board is about to meet shortly. So the plans will be, once bank board also looks into this part, we'll start the formal process. And we do expect that it normally takes around 12 to 15 months time. It requires approval from the Reserve Bank of India, from the SEBI and NCLT. So that's normally a 12 to 15 months time horizon. But certainly, I think the process is on, and it will be completed as per the timelines as I mentioned.
Good to have you on board. Thanks for joining in and taking us through all of those metrics in terms of your targets, as well as what the outlook is for Utkarsh Small Finance Bank. All right.